Traders at UBA expect the T-bills market to remain active as investors seek to fill unmet bids from this week's auction, where the Debt Management Office allotted 570 billion naira from the 1.06 trillion naira subscription level. Chuka Wanchuku, chief dealer and head of trading at UBA, joins me now for this conversation. Chuka, we're seeing quite an interesting session at the Treasury bills market now, with the DMO looking to stick to what it offered. Talk to us how the sentiments are in terms of investors.
Thank you, Aki. The sentiment is on the bullish side. We've seen, a massive drop in yield, which is obviously expected due to some huge system liquidity. Let me briefly just talk about the system liquidity, because everything on the fixed income market centers around system liquidity. So the week opened with a system liquidity of about 6.12 trillion. Despite the 2 OMO auction, the market still opened on the positive side of 3.7 trillion. So that obviously tells you the high level of liquidity we have in the system. During the week, we had about 2 OMO auction. The total of CBN offered about 1.2 trillion, which is in the total, the combined auction. And then subscription was well over 8.5 trillion, and the total sale was about 3.9 trillion. And so obviously you can see that system liquidity is still a major, it's still a lot in the market this week. Yesterday there was an NTB auction, like you mentioned. About 570 billion was offered, and that exact amount was sold. However, subscription was well over 1 trillion. So this morning we saw some of those unmet demand, filtered into the secondary market, and that obviously has helped to, decrease the rate, the yield further. We saw the 1 year, which printed about 15.77. That's about 101 basis points from the last auction, which printed at 16.78. We saw it trading around lower 15 and then upper 17. With this huge system liquidity and of course the huge unmet demand, we'll continue to see that one trade in the yield.
Now, with the way we're seeing this demands being unmet, do you think this is going to push investor sentiments in terms of moving away from, or will make the fixed income market unattractive, right, to investors?
I think that the Nigerian fixed income market is very lucrative. Even at 12%, you will still investors will still invest in it, and so because of the system liquidity and the high amount of liquidity in the system, investors will naturally want to invest in the safe haven, and obviously fixed income market is one of them. So I do not think that investors will be scared investing. If anything, they will rather invest, because don't forget that about 18 months ago, this market was around a single digit. And then less than 4 months ago, we saw about this market was around 21, 22 levels. So either way, Nigerian fixed income market is lucrative, and I do not think that investors, will run away from it. If anything, you can probably see 1 or 2 investors who we want to play on the equity side. But then with the stability and the security, that investors have, the fixed income market, they will continue to play in the fixed income market.
Let's look at the government's borrowing appetite and how well this is tilting towards the fixed income markets. Do you think in the long term we're going to see rates inch up a bit?
Yeah, so if you closely watch the fixed income market, you see that the market is seasonal. There are times when you see the yields highly elevated, and then there are times when you see the yields drop. So as a trader, if the yield is elevated, if you don't go in, when you're supposed to go in, then you missed out. If you don't go out when the yield is dropped by this time, you missed out. So government pattern of borrowing, you can see that government has mostly on the first and second quarter of every year, governments more like front load. They obviously project their borrowing pattern, and then knowing fully well that towards the third quarter and the last quarter of the year, most investors are taking profit. So I think that the government obviously has structured his borrowing and those who are managing the government borrowing, DMO and co, has actually done fantastic job by structuring the borrowing. So what we are going to see is that between the end of the month, we see downward trend in yield. It still does not mean that the fixed income market is not attractive. But going into first quarter of the year, we see elevated yield. The reason being that government obviously want to borrow for 2026 budget. So they will make the yield attractive for investors to come into and to invest. So between now and end of the year, we will see downward trend in yield. But going into the first quarter of next year, we see this yield greatly elevated just to make it attractive for more investors to invest in.
Thank you, Chuka, for your insights. That's Chuka Wanchukwu, Chief Dealer and Head of Trading at UBA.